Kramer is with us, founder, CIO, Kramer Capital Research. Thank you for being with us. Earnings season is underway. Next week will be even busier, but we had some big names, Visa, Intel, Tesla. What was your takeaway thus far?
Starting with the banks, it wasn't as bad and ugly as everyone thought it would be. Of course, the irony, which it always is the bank's biggest worry is that rates are going to be cut and that their margins are going to be hurt. So we made it through with the banks. The industrial complex, of course, has been weak for 2 years now, and that's why we had this disaster with Intel. And I think Intel being down over 10% is really very telling. On one hand, Nicole, we can say that it's AMD and NVIDIA has taken their business away, but on another hand, we can say it's really about the slowdown about what used to be the core of the American economy.
Yeah, and that was a question that we've had conversations about what's going on with Tesla. I mean, it's all, so much of this is about demand. I mean, you're talking about demand in the world of tech and semiconductor chips, but you know, how much EV demand is there, or how much demand there is for anything? That being said, but we are still seeing growth, and inflation seems to be going in the right direction. You have a lot of names that you're watching really closely. Netflix did incredibly well. That was one on your radar, right? As one of your good names.
Yeah, we're very positive on Netflix. We really believe that Netflix, investing what they are in Fort Monmouth, New Jersey, building what will be one of really the biggest studios in history, and with the right technology is going to make a big difference. Content is king. We always hear that, and Netflix understands it, and now they have content and delivery right on everyone's remote control when you buy it from Best Buy. It's right there. So we do love that. We are concerned about next week with big tech, except for Meta, Facebook. We do think that we could see some real misses there that could come in because there's just, well, you just talked about, demand. There's just too much stuff out there. There's also, even with inflation coming down, people just don't have the money. At 20 to 25% rate on interest on credit cards, there's just the consumer being squeezed.
Right.
And then we have the big elephant in the room, which is commercial real estate. And we can't underestimate, no, the cities aren't dying, but the traditional office in big city like New York is going to really weigh heavy, and it's going to weigh heavy. Not just the banks do fine; they're able to put off the whatever debt that they have to restructure right back onto pension funds and whoever bought it. But it's more all the small businesses and all of the people that depend on these big commercial real estate.
So when it comes to the Magnificent Seven, you seem like you're leaning in a good way to Meta,
yes,
but worried about the others. Is that right?
Yes.
You have Google, Apple, Microsoft, just waiting to see more from them before you would say jump in on those?
Apple especially is a concern. They just can only pull so many rabbits out of the hat. There's just been some degradation in that core quality that everyone expects from Apple, and customer service has been, when we look at the chain, has been a real issue and a problem that is turning people against going for that new Apple device. And so we're concerned especially there. We do, of course, love Microsoft, MSFT, but isn't it overextended at this point? And they're busy integrating new gaming companies and all sorts of new initiatives.
So which names are you recommending? Names, I mean, it sounds like a lot of hedging, and I understand why. So I'm not being funny about this, but are there names that you actually do see value in for 2024?
We see it in these one-off fallen angel kind of names that would be in the Russell 2000. For example, it seems like it's out of nowhere. They had a great earnings report yesterday, even though the stock's down 1%. Now, Levi Strauss, L-E-V-I.
Yeah.
Okay, look, I mean, they understand about getting rid of the retailer and going right to the consumer, and that's up 11%, and it's a very cheap stock.
Right.
Another one-off, which is kind of interesting, we actually think that General Motors, GM, The bar is so low, it can't get much lower. So they can only surprise to the upside, because remember, earnings at the end of the day, it's all still a game of really where you stand. And sometimes it's not a game that someone even meant to play. It's just how it came forward. So we really feel that way. And when and going back full circle to Tesla, TSLA, they hit their all-time high. Look, it was 2 years ago. It was New Year's, 2022, and that was really it for Tesla. Elon Musk said it himself. There's too much competition from China, and these recalls are an issue. And for how long do people have to say that the best talent got picked off and is all over the world, from Volvo to Daimler to at GM, that he used to pay for? And it's really about the people in any company at the end of the day.
And then the IPO market, I mean, that should help the banks too, but you are watching what's in the pipeline there, right? Are there certain names you're watching, or just feeling the vibe that there are going to be a lot of listings?
There's a lot of it's really sector driven in fintech specifically. There are some names that they're still even out there. They don't even have the big S1 done yet, but that have been in the pipeline, and the venture capital funds really, who are the ones that push these through and are behind all these IPOs. Last year, to do $10 billion of IPOs versus $100 billion, think about that differentiation. So I am really excited. The team, we're just, we have a whole chart and graph, and we're ready to pounce when the opportunity comes. And everyone should keep in mind with those IPOs, as an individual, you have so much advantage, because big institutions have to wait usually anywhere from 3 to 6 quarters before they're even allowed, mandate-wise, to even buy into that IPO. So you can get in and just wait for the big institutions to put it in their ETFs and in their funds.
Oh, I see. All right. Hillary Kramer, great to see you. Thank you so much. Really appreciate it. Hillary Kramer, Kramer Capital Research.